Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a special Friday episode with some earnings from TerrAscend and Air Wellness. Now, before we jump in, if you enjoyed this video and you learned something, please just leave a like on it as it really helps out my channel. And of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. Then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes over time to learn about the evolution of the industry, identify top companies that you keep seeing pop up, and take advantage whenever you feel ready. So we're going to start with TerrAscend's earnings as they report their full year 2021 net sales of $210.4 million, which represents an increase of 42% year over year. And while many Tier 1 and Tier 2 MSOs put out fairly ambitious growth projections for 2021 that were not met, I wouldn't blame that on their performance or their lack of ability to execute, but I think it's safe to say that they were anticipating certain markets that legalized in 2020 to possibly launch in 2021 because they could have, like New Jersey, like Connecticut, like New York. And so while we did not see that growth in 2021, it is going to come at some point when we get these new markets online. So let's go through some of the highlights as they recently completed the acquisition of Gage Growth Corp, a leading high-quality premium cannabis brand and operator in Michigan, helping them expand their footprint in the U.S., while their Pennsylvania facility is now producing the highest quality product to date, according to them, recapturing top 3 market share in the state. So good news for TerrAscend in Pennsylvania, while New Jersey retail and wholesale fully prepared for adult use launch. So it seems like TerrAscend is another one of the medical operators that has reassured the CRC, we have enough supply, please let us launch, pending regulatory approval, and they have completed their gap conversion to become a U.S. filer with the SEC. And so if you want to just pause to read the fourth quarter 2021 financial highlights and the full year financial highlights, you can get the bulk of it right there. But I do like to look at the year-over-year comparison just to see, are they increasing their revenues? Are they increasing their profits? Are they cutting costs? Are they cutting the cost of goods sold? Are they cutting their general expenses like administrative and marketing costs? Just different things like that. So looking at the short-term quarter-over-quarter performance without the launch of New Jersey, this makes sense as to why Q3 and Q4 were relatively flat. Plus Croptober, which I imagine all the MSOs have to deal with, but it is nice to see them increase revenue from Q3 to Q4, even if it's just 0.2%, which means they likely kept their market share and gained a small percentage there. But it is funny to put ourselves a year back at Q4 2020 after New Jersey legalized, and they thought, well, this is our best quarter yet. If they can launch sooner than later, we can keep this momentum going, and that would be great. And I imagine they were very happy to announce that when their adjusted gross margins were at 60.5%. But the main reason we see this fall is just likely because New Jersey didn't launch when they possibly could have. As Q3 2021 gross margins fell 46.2%, but they got them up in this most recent quarter to 49.8%. So let's look at the year over year though, as this is much more important to look long-term, especially when we consider what this industry has going forward into the next decade and the massive total addressable market that will organically reform their laws over time and join in on this. And so if we look 2020, total revenue $147.8 million, 2021 up to $210.4 million, helping them keep $112.1 million in gross profit of $210.4 million of revenue in 2021 compared to $81 million in gross profit from $147.8 million of revenue in 2020. While their adjusted gross margins did decrease a little bit year over year from 57.2% overall in 2020 to 56.1% overall in 2021, but I still think gross margins above 50% are very respectable. While their share-based compensation expense did go up in 2020 to $14.9 million, up from $10.1 million in 2020, but it costs money to make money and hire the right people that know what they're doing. While their general and administrative expenses did increase as well from $55.5 million in 2020 to $66 million in 2021, but if you keep in mind that they spent about $10 million more on their general and administrative expenses to make about $60 million more, seems like they're managing their money well on the inside, as the percentage of revenue for the G&A expenses in 2020 was a total of 37.6%, in 2021 just 37.4%. So being more efficient with their money is always good to see. While they managed an adjusted EBITDA in 2020 of 41.7%, and that is up in 2021 to 65.6%, while this percentage of revenue went from 28.2% in 2020 to 31.2% in 2021. So they're increasing, keeping earnings where it matters, helping them post a positive net income of $6.1 million for the full year of 2021, which is a significant improvement from the negative $142.3 million loss of net income that they had in 2020. And so if we look at cash flow from operations, they're not cash flowing yet, but in 2020 they had a negative $37 million in cash flow. 2021 full year a negative 31.8. And if we just look at these past 2 quarters where we did not see much growth, they are significantly decreasing how much money they might be wasting, as Q3 2021, cash flow from operations was negative 17.9, while Q4 2021, cash flow from operations was negative 3.8. And so if you're not a trader just looking for short-term gains and you can zoom out and see what's to come for this industry in the next decade, I think this was a very good year for TerrAscend, considering the fact that New Jersey did not launch, plus Croptober and all the other things going on around the world that companies, like supply chain issues that companies are having to deal with. Because when we consider the fact that they didn't get some of the growth that they were anticipating from New Jersey, it's because New Jersey didn't launch. But we know that New Jersey is going to be launching in the coming months. So that means that growth is likely going to come, and then likely then some as the momentum continues. And so you can pause to read for some more information on their fourth quarter 2021 business and operational highlights, plus subsequent events. But the last thing, I just like to scroll down and take a look at their balance sheet to see if they have enough cash on hand to pay off any current liabilities if any surprises were to come about. Because if we look at their current assets, this is assets that they have in the next 12 months prepared to cover any current liabilities. And so they've got $79.6 million in cash, plus they've got $14.9 million of accounts receivable. So that's money they anticipate to be paid from people that they've done business with. And then they've got roughly $42.3 million of inventory of cannabis that they can sell. So likely over the next 12 months, they have about $143 million of disposable income that is either in cash or they could turn into cash to use. And then if we look at their current liabilities, and this would be any liabilities they're expected to pay in the next 12 months, we can see that their total current liabilities is just $70.3 million. And so I do like to see that they have enough cash on hand without even having to get paid or without even having to sell inventory, but they have enough cash on hand by itself to pay off any current liabilities if need be. And so if any problems arise or any surprises come, just goes to show that they have a lot of cash on hand, and so they should be able to pay that off and deal with that if any problems were to come. Not to say that they will, but if we look forward into 2022 and anticipate New Jersey launching, that should help TerrAscend nicely. So good job, TerrAscend, and hopefully all your dreams and ours come true in 2022. Well, I wanted to share this one from Todd Harrison, as this is what Stifel, the investment firm, has to say on TerrAscend Corp. So again, this is not advice, but it's just a second perspective on these recent earnings that we saw. As Todd Harrison highlights, greatest upside potential from New Jersey adult use plus meaningful optionality, though through additional M&A, I think he means that, but by a 20 Canadian dollar price target. And so you can pause to read the Q4 2021 inline, catalyst rich starting 2022. And again, this is what Stifel has to say on TerrAscend. So next we jump over to Air Wellness, as Air Wellness reports their fourth quarter and full year 2021 results. So some highlights from the get-go: Q4 2021 revenue of $111.8 million, up 16% sequentially. Q4 2021 adjusted EBITDA of $26.1 million, flat sequentially, likely again due to Croptober for the most part, while full year 2021 revenue and adjusted EBITDA of $357.6 million and $98 million, up 131% and 84% year over year respectively, while US GAAP operating loss of $13.8 million and $56 million for Q4 and full year 2021 respectively. Because you know Air gets it, and that's why they're spending a lot now while it's cheap so that they can sell for a much higher price later on. And so looking at their fourth quarter financial highlights, looking at Q4 2020 to Q3 2021 to this most recent quarter of Q4 2021, we can see they increased their revenue from last year, $47.8 million, up to $96.2 million, up to $111.8 million, representing year-over-year increase or year-over-year growth of 133.9% and quarter-over-quarter growth of 16.2%. Keeping an adjusted gross profit last year at this time of $28.7 million. They increased that Q3 of 2021 to $56.6 million. In this most recent quarter, keeping $63.3 million, which also represents year-over-year increase of 120.6% and quarter-over-quarter growth of 11.8%. But their operating income has taken a hit, unfortunately, but that's also likely because they are expanding and have done a lot of shopping in this past calendar year. As we can see, Q4 2020, they had a positive net income from operations of $6.7 million, but then Q3 2021, that was in at a negative $8.9 million, while Q4 2021, this latest quarter, they were hit with a negative $13.9 million from operations. But again, that's just the cost of expanding now while it's cheap, but that has affected their adjusted EBITDA, or earnings before interest, taxes, depreciation, amortization. As we can see, before they started aggressively expanding, Q4 2020, they had an adjusted EBITDA of $18.6 million on revenue of $47.8 million, which represents a very good adjusted EBITDA margin of 38.9%. But as we can see, this has fallen since they've been aggressively expanding, but they should be able to offset that, by the end of 2022 if things go well and markets get launched on time, as their adjusted EBITDA in 2021 was just $26 million, representing 27% of revenue. And then in Q4 2021, the latest quarter, they got that just up to 26.1. And so that increased by just $100,000, representing 23.3% of revenue. So obviously that's not ideal to see, but temporary growing pains in order to be one of the big boys in time. And so we're looking at their full year 2020 versus full year 2021. We can see revenue increased 130.6% from 155.1 million to 357.6. So good job, Air Wellness, with an adjusted gross profit of 91.7% up to 207.3%, and that is a 126.1% year-over-year change. But their adjusted gross profit fell a little bit from 59.1% to 58% overall. But their operating income as well, again, before aggressively expanding, they had a positive 1.2 million as a much smaller company. Now it's a negative 56 million, but this is a company that is about to close on a lot of deals, and that will allow them to bring in more sales, obviously going forward in the future. For their adjusted EBITDA margin, full year 2020, 53.4%, representing 34.4% of total revenue, versus 98 million of adjusted EBITDA in full year 2021, representing 27.4% of total revenue. And so fourth quarter recent highlights, if you want to learn what they're doing in the Northeast, you can pause to read. And then this covers the Southwest in Florida, what their plans are. You can pause to read as well. Recent M&A highlights, as they continued their spending spree in Q4 of last year, and they've even made a few new purchases in Q1 of this year, so you can pause to read if you'd like to see. Plus, we've got some updates in their financing and capital structure. But I wanted to highlight this because they did not put out a press release for this, I don't think, but obviously they just wanted to add it in this. On March 16th, 2022, so 2 days ago, the company entered into a $26.2 million mortgage loan agreement with a community bank with an annual interest rate of 4.625%. So that is the new cannabis industry low from my understanding. Now, I'm just curious, which community bank in which state? They don't share which state, so I would love to know where that was. But when we consider the fact that Air Wellness got a loan, just $26.2 million, but at 4.6%, that is awesome. So good to see them, secure this, and I imagine that will help them do whatever they want to keep continuing to do into 2022. Well, during the fourth quarter, the company did repurchase approximately 573,000 subordinate voting shares as part of its stock repurchase program for a total of over $11 million. Now, in hindsight, could this money have been spent a little bit better as opposed to buying back shares when we just continue to see the price action go down? Obviously, you could argue that, but at the same time, I think it did give investors an air of confidence, and at this point, the stage is really just set for 2022 and ongoing forward. And so they wanted to revise their outlook, assuming the company receives these regulatory approvals sufficiently in early Q3 2022, and I think that they're waiting on New Jersey as well. So same deal as TerrAscend. The company anticipates an annualized run rate, 250 million of adjusted EBITDA, 100 million of operating income, and 800 million of revenue for Q4 2022. So if we scroll down just lastly to look at their balance sheet as well, see what they're dealing with. Cash on hand, 154 million, which is up from 127 million that they had last year. Accounts receivable, 7.2 million. Inventory, about 93 million of cannabis. So all in all, their current assets, they have 266 million on hand. If we look at their current liabilities, in the next 12 months of 152.3 million. And so it's good to see that Air Wellness has padded their cash balance as they have enough cash on hand to completely cover their current liabilities for the next 12 months if need be. Plus, they've got other ways to eventually get cash here, whether through selling inventory or getting paid the 7 million outstanding that they're owed, so that they don't have to dip into their total assets. So it seems like they're ready for the next year. So good job, Air Wellness, on these earnings. And while I don't own shares in Air Wellness and TerrAscend, and this is not advice, I just want to walk through them to show you how I look at these companies going forward. And I'm happy to share Air Wellness and TerrAscend just because I've watched them over the last 3 years develop, and I can tell you that they are not pump and dump scams. They are real companies that are they're companies run by real people trying to build real sustainable businesses over time. And I just feel lucky that we get to watch all this unfold in real time, and we can get rewarded if we're patient enough. And so on to this one from Todd Harrison. So thank you, Todd, for sharing what Beacon has to say on Air Wellness. Now, this was published on March 16th before they even released the earnings, but apparently, according to Todd, and I'm not sure where he got this because this is not added in this little snippet, so take this with a grain of salt, but apparently they increased their buy rating to an 81 Canadian dollar price target. So that's pretty impressive. But nonetheless, stock now trading at a 51% discount to peer group reflects underappreciated revenue balance, especially as they're also waiting for New Jersey to come online. So you can pause to read, or you can grab the link below if some of it is cut out from my little face here. Onto this one from Seishu Metacharla. Thank you, Seishu, for providing another deep dive for free on Twitter. And so this one covers Air Wellness. He did not do TerrAscend, but he did do Air Wellness, and he does a much deeper dive into the actual numbers and figures. And while I'm not trained in finance, I don't feel so confident getting deep into this. So if you want to get into the weeds, you can grab the link below from Seishu, and he goes through and he has quite a long little spiel. So you can grab the link grab the link below to check that out. On to this one from CNBC Overtime, from Cannabis to the cloud. Here are Ricky Sandler, CEO and CIO of Eminence Capital, his top stock picks, and what he says are the next big growth industries. Let's see what he's got to say.
We think that the U.S. MSOs, particularly Green Thumb, VRNO, and TerrAscend, they trade in Canada, they trade on the pink sheets. This is one of the next great growth industries that has stocks that are severely mispriced because there's still a large number of institutions that are not yet comfortable buying these stocks. And so even though they're legally operated at the state level, we still have some federal ambiguity, which is keeping people from buying them. So you have a big mismatch, and stocks that are massively mispriced. Those companies trade at 8 or 9 times this year's cash flow, 6 or 7 times out year cash flow, maybe less. And the opportunity for that space to triple or quadruple over the next 5 to 7 years, and we can identify the winners and the leaders today. And so because they're not listed on U.S. exchanges, and because there's some compliance concerns at traditional institutions, there's a big mismatch. And we expect that to change in 2022 as we get some safe banking regulation is something we think is quite probable this year.
I hope so too, Ricky, but I'm very glad that you've caught on to this opportunity and you see it for what I see it and for what many of the viewers here likely see it as well, as a very big opportunity, as prohibition only ends once in a lifetime. And so on to this one from Todd sharing what Pablo at Cantor has to say on U.S. cannabis. So I'm not going to go through all this, but just to share, as you can pause to read, key upcoming events that could shape the MJ reform outlook. So he shares the investment summary here. But I did just want to share one snippet from in here where he says, "We believe SAFE has over 40 votes in the Senate already." Yeah, I'm pretty sure some other sources mentioned that they've got 70 votes in the Senate. And so we clearly know SAFE is good policy. And if it were to be brought out for a vote today, it would pass overwhelmingly. And so it's just up to Senate Majority Leader Chuck Schumer to keep his campaign promises to the American people or do his job. And his time is running out as we move from March into April. And so I want to share this one from Denis Rudev, latest piece on Cantor on cannabis legislation. Now this is a different one, but I want to read this snippet from down here. Bill to pressure the UN to deschedule cannabis, as this is a brand new development. As soon as this week, we believe that Representatives Barbara Lee and Nancy Mace will both file a bill in the House to encourage the U.S. government, the White House, to vote to deschedule cannabis in the next UN session. That would be ideal. But from my understanding, looking at the history, it was the U.S. that bullied the UN into complying in the first place. So I think it would be best if the U.S. would take the lead, deschedule first, have the UN follow, and then have all other countries follow. But again, I don't know how this is going to play out in time. But to keep going in part, we assume the timing of this proposal is related to the incarceration in Russia of WNBA star Brittany Griner. Back in December 2020, the UN voted to remove cannabis from Schedule 5 or Schedule 4 of its drug classification list, which includes heroin and fentanyl, recognizing that cannabis did not produce the same risk of addiction or generate potentially adverse physical reactions of other Schedule 4 drugs. In theory, the vote was supposed to encourage member nations to approve additional medical and scientific research on cannabis, but this new House bill aims to have the UN deschedule cannabis for all users. We see the proposal as quite ambitious, especially in the current geopolitical context, and doubt the White House will follow suit. That's too bad, because that's the only way that the Dems are going to win any more House and Senate seats likely in November. That said, it is always encouraging to see high-profile House members from different parties working together to produce change regarding cannabis. Note, Rep. Lee is a senior member the House Appropriations Committee, sure enough. I think it's more safe to say that it's always encouraging to see American lawmakers doing the right thing and working for the American people when they can. But some other news just to round off the week, as cannabis legalization hasn't led to more youth use. Report from alcohol and tobacco industry back group says. And while we already know this because there's plenty of data already that supports this, it's good to get more data that we can rub in the face of any prohibitionists that want to use old, outdated arguments. As this report from CPEAR, whose members include Altria Client Services, Molson Coors Beverage Company, and Constellation Brands, was released ahead of a planned panel event the group is hosting on Thursday, focusing on youth prevention and featuring Senator John Hickenlooper. And so, some details. CPEAR's new 29-page report details how researchers have consistently found that youth cannabis use either decreases or remains flat in regulated cannabis markets, a point that's been supported by recent federally funded surveys. While one of the most recent surveys stressed that youth use decreased significantly in 2021, as did teen consumption of illicit substances overall. So there you have it. The data doesn't lie, and it's time to end cannabis prohibition. So thank you, NBC, for sharing the marketing genius that is Mike Tyson, as Mike Tyson's cannabis brand is making ear-shaped weed gummies nearly 25 years after the boxer infamously bit a chunk out of Evander Holyfield's ear during a championship fight. I thought this was too good. I was dying laughing when I first saw it. Holy ears, they're finally here. Go get your Mike Bites now. So great way to end this off with a little bit of humor, and then wanted to share this chat with Toby, Channabis, and Jeff Schultz, I believe his first name is, to discuss the dynamics around New York's launch. And this was Wednesday night. I did tune into a bit of it, but they did talk for about an hour and 48 minutes, and so you can grab the recording below if you want to tune in and learn a little bit more of what we can look forward to in New York in 2023. But Before that, don't forget that we've got Connecticut, New Mexico actually launching April 1st, and then New Jersey sooner than later, hopefully. But that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or concerns, and I'd be happy to address them. But besides that, if you enjoyed this video or you learned something, please just leave a like on it. Subscribe below if you don't want to miss any future videos, and I will catch you on Sunday for This Week in Cannabis News. Have a great week, everybody.